What are check cashing fees? Have you ever wondered what check cashing fees are and why they exist? If you have a check in hand and need cash, understanding these fees can save you money. Check cashing fees are charges that banks, credit unions, or other financial institutions apply when you cash a check. This is especially true if you do not have an account with that institution. These fees help cover the costs of verifying the check and providing you with immediate cash. Let's break down how these fees work. First, your account status matters. If you have an account at the bank or credit union where you present your check, you might pay lower fees or even avoid them altogether. On the other hand, if you do not have an account, you will likely face higher fees. This is because the institution takes on more risk and has additional administrative costs. Next, the type of check you are cashing can influence the fees. Different checks, such as payroll, government, or handwritten checks, may have different fee structures. Each type of check has its own verification process, which can affect the cost. Now, let's talk about the fee structure itself. Some institutions charge a flat fee, while others charge a percentage of the check's value. For example, you might see fees ranging from a small fixed amount for checks under a certain limit to a percentage that could be 1% to 4% for larger checks. Additionally, some banks set minimum and maximum fee limits, which can also affect how much you pay. State laws can also play a role in check cashing fees. Some states regulate these fees, especially for payroll checks. They may require employers to ensure that employees can cash their paychecks without incurring fees at the issuing bank or credit union. Additionally, some banks and credit unions offer extra services. They might allow you to load the cash from your check onto a prepaid card or provide other cash solutions, sometimes without extra fees. For example, a credit union might charge a minimum fee of $3 to $5 or a percentage, around 1%, for members cashing checks. Non-members may pay higher fees. Banks might not charge fees for checks under a specific amount, but may apply a percentage fee for larger checks. These fees help institutions manage the costs of verifying the authenticity of checks and distributing cash. They also help reduce the risk of fraud or insufficient funds. By charging these fees, banks and credit unions encourage customers to open accounts, which can benefit both parties in the long run. In summary, check cashing fees vary based on account status, check type, amount, and local regulations. Understanding these fees can help you make informed decisions when cashing checks.